Hello and welcome to The Trade. Before we get into the charts, let's have a look at what traders are watching. And 4 days into the war in the Gulf, President Trump has said that the US military has struck numerous Iranian naval and air targets, saying, quote, just about everything has been knocked out. This as the conflict spreads to Lebanon, with Israel targeting Hezbollah. Iran has fired missiles and drones at neighbouring Arab states that host US bases and strangled shipping through the Strait of Hormuz, where a fifth of the world's supplies of oil and LNG transit. Investors dumping bonds globally on fears that the US-Israeli war on Iran will stoke inflation, and US Fed member John Williams says that so far the impact on the Middle East war on markets has been, quote, reasonably muted. In particular, rising energy prices, saying that the important question is quantitatively how big of an effect does that have on the US and how persistent those effects are in terms of price stability. Fellow Fed member Neil Kashkari saying that with the geopolitical events, they need to get a lot more data in, and it's too soon at the moment to say what impact it's had on inflation. US Treasury slumped for a second day amid the surging oil prices, which prompted traders to dramatically reassess the prospects of more interest rate cuts. And Australian 3-year government bond yields have risen, and they're currently at levels we haven't seen in a couple of years. The 10-year at 4.79%. The US dollar index, meanwhile, is getting a little bit weaker in Asian trade. The Aussie dollar, stronger I should say, the Aussie dollar is at 70.2 US cents. Well, to get across the charts, I spoke to Violeta Todorova from Leverage Shares. I should point out we were discussing where the ASX 200 was ahead of today's open, but of course she's talking about some of the key technical indicators you need to be looking at.
We did on Tuesday a little bit of a decline on the S&P ASX 200, and I think there is a potential for further weakness in the short term. At the moment, I'm not envisaging a big decline, but we have to be monitoring very closely minus support of 8,683 points, which is the level, if it holds, it will suggest that the Australian market is not going to experience a deeper pullback. However, should that level gets broken on the downside, we can see further weakness to around 8,400 points, which is a significant decline from here, and it's pretty much the key support level for the index. But as you mentioned, Australia has a lot of gold and oil company which are impacting and weighing on the index. So I think the decline is not going to be as pronounced as in other equity markets, and I still remain positive by the end of the year, and I'm keeping my longer term price target of 9,600 points unchanged. So expecting a little bit of turbulence in the near term, but I think the market will regain its footing. It's outperforming US equity peers at the moment, and I think that outperformance will continue in 2026.
Well, let's then get into the outlook for oil, because there is concerns if the Strait of Hormuz is closed or disrupted for longer, then we could see maybe triple-digit oil. Let's touch on that and maybe where some of the beneficiaries are here.
Yeah, I think this is what investors are watching right now, and the conflict in Iran, it's beginning to resemble to what happened back in 2023 when the US changed the regime in Iraq. So that led to a very prolonged conflict in the region. So what we are seeing now, it's nothing unlike the July 2025 12-day attack on Iran. The situation is totally different. I think there are a real probability of the Strait of Hormuz being completely shut down. Even at the moment, while it's not officially closed, there is massive disruption. Insurance are hiking their premiums, and pretty much there is so much fear. Basically, no ships are passing through the strait. So that is beginning to look like what we've seen back in 2003. The price of oil when the first attack occurred was around 26 US dollar per barrel. And by the end of the operation has finished, oil was trading above $46. But what is the most concerning is that The tension in the Middle East continued up until 2008, just before we saw the GFC. And at that point, oil was trading at $146. So from 26 to 146 in the space of 5 years, we witnessed significant advance in oil prices. And if that situation unfolds in a similar manner, I think $100 per Brent, it will be a very, very conservative price target. And over the next couple of years, we can see significantly higher prices exceeding $200 a barrel. So I think there is significant risk that this tension will expand from the early days of the conflict. All signs are pointing that it won't be a resolution in the short term, so investors should be prepared for significantly higher prices for the rest of 2026. And of course, high energy prices will benefit a number of Aussie stocks. And I've been looking over the past couple of months, Woodside Petroleum, Santos, Karoon Energy, those stocks have been trading in downtrends and they appeared significantly undervalued and oversold on the charts. So I think they're turning the corners. We've seen a couple of bullish breakouts. So I think there is massive upside potential for investors to invest in these stocks at the moment.
In terms of gold as well, the safe haven play, just briefly, Violeta, what you're seeing there and the potential winners on the ASX.
Yes, the gold, it's trading higher after the brief and sharp pullback 2 months ago. And I think we are going to revisit the key resistance of 5,600 points, which in my view is going to be broken on the upside in the very short term. And my previous $6,000 an ounce upside target is going to be a very conservative one. And I think that level could be exceeded significantly this year if the tensions in the Middle East extend further. So there are many Aussie gold miner stocks that investors can invest. The big ones are Northern Stars, and we've seen significant moves, and the stock recently reached a fresh record high. Also, Persia Mining is up there, Capricorn Mines, Evolution Mining. The list is pretty large, so I think all those small and large gold mining stocks are going to fare very well in 2026. And this is my second sector that I'm keen on investing for this year.
All right, that does it for this edition of The Trade. Be sure to join us next time.